Look, these innovations are being led by a combination of both, and if you think about it, it has to be. You've got the microfinance institution and the banks who are deploying it to their customer base, and you've got technology vendors and a whole lot of fintech investment. In fact, $50 billion of fintech investment in the last 5 years, driving a whole lot of product into innovation from vendors. So when you put those two things together, it becomes very powerful and offers a very optimistic future for including people in the financial system. Look, the Cullinan group sees that the more promising opportunities in digital inclusion are really to leverage the relationships that these people have with customers in a way that uses technology and, in particular, data. The data that's been collected by microfinance institutions on these customers is incredibly valuable. That data can then be used to build a profile of these customers and to include microfinance clients include them with many other products, micro insurance policies, deposit products, lending products, payment products, and all based around a real knowledge of the customer that they already have today but have probably not leveraged at this current point in time. There is a real opportunity to define a new frontier with microfinance institutions at the centre of a very important customer relationship. You have to understand that in 10 years' time, as wages grow up in these countries and these countries develop, people become more financially included. Many of these customers and their families are going to live more meaningful financially included lives. So whereas they might start off with a small loan for $150 today, their businesses may develop and they need other form of funding supply. These types of things can all be built around a data-driven relationship with the customers, and I think microfinance insurance institutions are in the box seat in terms of managing that relationship in a way that has a whole lot of trust and meaning to the customers that they service. There's quite some innovations coming through the pipeline that are likely to have a dramatic effect on that situation. First one that I see, models like Lending Club and Cabbage in the US, where you're actually operating a marketplace to source funds. Those sort of technologies can have a dramatic impact on the cost of funds. People like Credit Karma also in that space. The second is financial inclusion apps, apps that are really allowing customers to do budgeting and report on budget versus actual. Those sort of apps, put in the right hands, have an ability to get an app out there that adds value to the financially non-included and get them to use it. And that's the point. Payments, models like Alipay, Bcash, where you're using a mobile phone to make payments, again, include people and get them to use the technology at the same time. So I think they're the important ones.